Are you on the hunt for local housing market updates for the Twin Cities region, but are sick to death of everyone either trying to buy you or scare you? You are in the right place. This video will recap the final month of 2022 using real data that is honest and to the point. No sales pitch, no fear, just info. I will be covering inventory trends, sales prices, buyer demand, and how the market is balancing right now. When looking at data during the off-season, aka the winter months, it is extremely important to look at annual trends to show seasonal changes, the good and expected ones, but also other changes that may be highlighting real large-scale adjustments. One of the first impacts of the off-season can be seen here in the total inventory in the Twin Cities region. If you look at the 10-year trend line, we bottom out in total options every December, January. So it's no surprise that we are down roughly 25% in total homes for sale compared to the month of November. However, if you zoom in just the years of 2021 and 2022, you'll see that inventory has increased slightly since last December. This is good news for buyers because there are more homes to choose from. So now if we take a look at new listings added into the market, you will see that December is the lowest point of inventory every single year since 2012. This is an expected trend line, mostly due to the holiday season. The other part of the market that is impacted by the off-season is home sales prices. Here you can see that over the last 10 years, homes are at their lowest prices in the months of December and January. The median sales price in the Twin Cities region in December was $348,000, up $16,500 from December of 2021. But you can also see that this trend line has been continuously growing over the years. This is a key feature that I like to take into consideration when people try to discourage others from buying because the market isn't right. You can't time markets, and if you try, it could end up costing you tons of money. Like, wouldn't it be great to be able to go back to December 2012 and buy a home for $165,000? I agree, but we can't. Prices are expected to continue increasing, just not as quickly as they jumped during the pandemic. Now let's take a look at the percentage of the closing price compared to the original asking price of homes in December. We saw a dip down to 97.6% of the asking price in December. This is the lowest below asking we have seen since February of 2017, and there are a couple of reasons for it. Several sellers are hoping to sell their homes for what their neighbor's home sold for in July of 2021, and that is just not the strategy you can use during the off-season. So we are seeing higher levels of homes listed for more than what buyers are willing to pay for them. This percentage will climb closer to 100% of asking price, and possibly even higher than 100%, as we re-enter into the spring market and demand increases. Speaking of demand, here you can see the average number of showings per listing in the Twin Cities region. This trend line isn't as neat and clean as others, but we do see the least amount of showings in the winter month. Most of these dips line up directly with the winter, with the exception of this one, which were the months of March and April of 2020, directly following stay-at-home and distancing guidelines. In December of 2022, we saw an average of 3.9 showings per home. We can also take a look at the median days on market to see just how long it is taking for homes to match with the right buyer. In December, we climbed to 34 days on market, which seems dramatic because it is the longest timeline that we have seen since early 2020, but it is on par with pre-pandemic trends. We are still seeing a delicate balance here in the Twin Cities with supply and demand meeting each other a little bit better than last spring. This final graph shows the month's supply of homes. We determine this statistic by calculating the number of active buyers to the total number of homes to sell, if we pretend that no new buyers entered the market and no new homes were listed for sale. This statistic shows us just how long it would take for all of the inventory to be sold. In December, we were at 1.4 months supply. A healthy balanced market is between 3 and 5 months. So we are still definitely in a seller's market, but with limited inventory and limited buyers in the off-season, we are still seeing more negotiation power in the hands of buyers. Most of this has been seasonal change, but there has also been a forced slowdown with increased interest rates as the Fed battled with inflation. Rates hovered right around 6.35% for a 30-year fixed-rate loan in the month of December, and they are expected to remain low to mid-sixes until the spring. So there is your recap of the local housing market here in the Twin Cities. No sales pitch, no fear, just info. Stay tuned for my next video where I will be showing predictions for the real estate market for 2023 here in the Twin Cities. I have a feeling that it's going to be a wild ride, so be prepared to buckle in. Thanks for watching.